What's going on, guys? Welcome back to another video. Today we're going to be talking about options flow data. If you're new to the channel, my name's Kyle and this is Opinicus Holdings. Options flow data is definitely an underutilized tool that many options traders I know for a fact are not utilizing. And I know that because in talking to my clients and talking to other traders, they either have heard of options flow data or they don't know how to access it, or there's some other obstacle in their way that is not allowing them to either get educated about it or get access to it. So I wanted to kind of clear some things up regarding options flow data and let you guys know how you're actually able to access it, what it looks like when you get access to it, and how you can benefit in your trading with having access to this data. So options flow data, sometimes referred to as unusual options sentiment, flow volume, options flow, unusual options activity. It has a variety of names, but it's all referring back to the same exact thing. And what that is massive block orders that you see come through the tape that are signaling that someone, a big player, otherwise known as smart money in the market, is purchasing a huge amount of this particular contract. And what does block order mean? What does block option mean? It just means that they're purchasing a large chunk of this contract all at once. So if you had access to this information and you could see that some market maker, some fund trader, someone who has access to a massive bankroll and who is trading millions of dollars worth of stocks and options, if you can see that they are purchasing, $500,000 worth or $1 million worth, or even more than that worth of a particular options contract, this is probably going to pique your interest as a trader, simply because, what does this guy know that he's willing to put so much money on the line and risk it with this particular trade? Now, we do see this with stocks as well, just straight up stock trading. You'll see massive block orders being traded, but you don't always see them immediately once they are happening. That is because the orders themselves are hidden within dark pools. If you're unfamiliar with what dark pools are, I highly recommend you look it up. But basically, it's a way for big traders and fund managers to trade large blocks of shares, underlying shares, without the retail public knowing. Now, that's not possible to do with options. Options, everything is visible, so we as retail traders and as the quote-unquote small guy are able to see what these big players in the market are doing. We're able to see their multi-million dollar orders. And this information is extremely valuable because you can oftentimes piggyback on these trades and make a great gain from it. I'm going to show some examples later about what that looks like and everything. So stay tuned for that. Now, once you can get access to this kind of data, you first have to have the mindset and the belief that, okay, I see this so-and-so player in the market. Of course, you can't see exactly who it is, but you see that this person is placing a massive trade. So you have to kind of have the mindset and the mentality that the big players likely know something that retail traders, that the everyday trader like myself, like you, do not know. After all, you aren't given a multi-million dollar bankroll to trade with if you're just playing a guessing game and throwing money here and there all around and, trying to pick a few winners. No, these guys know definitively what they are doing, and they have, they're professionals. They have a specific plan put in place, and they know exactly how they're going to execute it. Now, additionally, we must also believe that this higher volume in a particular contract will lead to higher prices. This is just a mentality that you have to have in order to really and truly utilize this options flow data. Now, this type of mentality goes against what I normally teach my clients when they come to me to learn about options trading, because I take a more technical approach to the markets in that we analyze price action and volume, and we're looking at breakouts and patterns and things like that to make our trades based off of. That being said, options flow data can often stand to trump the technicals. To put it simply, this options flow data can signal that a big move is coming in the underlying. Now, let me show you one example. Just recently on July 5th of this year, someone purchased a large block order of the ticker symbol ATUS. The order they placed had a July 20th expiration, 17 strike calls. That was what the order was for. July 20th expiration, 17 strike calls. Now the bid-ask spread at the time, the premium on the bid was 0.20 and the ask was 0.30. So a fairly wide spread. Again, these are very low priced options, but this is just one example of many that we see on a daily basis. And the order, the flow came through and the purchase was for 0.25, 25 cents per contract, which would be $25 per contract. And the order was filled for 2,796 contracts. So let's break that down really quick. Someone spent $69,000, just shy of $70,000 on this particular strike, on this particular options chain that rarely sees volume of more than a few dozen contracts traded per day throughout the entire options chain. Now, what do you think happened within the next 20 minutes, within the next few hours? The stock absolutely exploded in price. 3 hours later, the bid-ask spread was 0.60, 0.70. Now, with the assumption that this order that this large player placed was closed out at the ask, the trader's initial entry of $69,000, $70,000, 3 hours later was worth $195,000. That's a gain of more than 100% in a matter of 3 hours on a single trade, just by using options flow data. Now, this order came through and was presented to us less than 2 minutes after it was placed. Now, we had the opportunity to secure entry on this trade at 0.30 the moment we received the notification. Like I said, that's more than 100% gain. Now, you may be thinking that this type of data is an anomaly, but I assure you it is not. It happens on a daily basis. We see the big orders come in. Sometimes we're confused about, what's happening, not really sure on taking entry. And then hours later, sometimes even minutes later, the stock makes the move that was predicted by the options flow data. Of course, it requires you to take action upon the data that you receive, and you yourself are responsible for the trade. I'll put one example up on the screen right now showing what the flow data looks like. So how is the information presented? Well, you just saw an example of what it looks like when it comes through to us. The information is then processed and posted automatically directly into our think tank. What's nice about the data that we are presenting is it eliminates all spreads. If an order is entered by one of these big players as a spread, our filtering automatically filters it out and does not include it when it's pasted into the think tank. Spreads, in my opinion, are totally worthless, and that goes the same for saying straddles and strangles. We filter all of those out and we only include the directional trade. Now it shows the time the order was placed by the big player, the ticker symbol, the amount of contracts purchased, what price it was purchased at, the implied volatility of the particular options contract at the time the order was purchased, as well as the exchange it came in on, which is, relatively useless information, but it still is included. The bid-ask spread of the particular contract when the order was placed, and it includes the price of the underlying, so the price of the stock when the order was placed. Now again, like I said, while most of the trades that come through will likely end up being profitable at one point or another, you never know the trader's intentions, who placed the trade, who executed the trade, so you have to keep your own risk management procedure intact. Of course, you could see some flow data come in, it could be months from now that it expires, and in the coming weeks you follow this trade, and in the coming weeks, it has lost a lot of value. This would be poor execution and poor use of the data. You want to keep your normal risk management, closing out at 10% loss, 15% loss, whatever it is. Because again, this data is not a sure thing. Yes, likely at some point or another, it will be profitable. But like I said, you don't know the trader's intentions who place this trade. So it could always be a hedge. It could always be, used as insurance for a much larger position that they have in the shares. So you have to keep this in mind as you navigate through the data that's presented. And as always, follow this data with light size. I wouldn't recommend taking a full size position, especially if you don't know the particular trader's trade plan, or if you don't have a trade plan yourself when you receive the data. So when I receive this data and I want to take a particular trade, I must always enter with half size as opposed to a full size position like I would normally do. I hope you guys found this information useful, and if you'd like to try out our access to options flow data for free for 3 days, I will include a link below in the description. It's the first link. Thanks so much for watching, and if you have any questions at all about options flow data or other ideas you'd like to see for videos or other options related trade recaps, anything like that, please just let me know in the comment section below and I'll see what I can do. We'll see you in the next one.